Hey guys, what's going on? I am back. Yes, it's been a long time. It's been way longer than I thought it would. But I'm back now. Hopefully, I can release a lot more content, share a lot more knowledge with you guys because I've learned a lot of stuff over the last few months and years, frankly. And hopefully, I can, share with you guys. We can grow together, we can learn together. And that's the goal. Okay, I'm going to try and keep this video short. I just wanted to show you guys some technical analysis that I've learned. And it's pretty much the way I've been trading. So I've been trading gold recently in the last few months because the way I'm trying to trade, gold sets up pretty nicely. And mostly I'm trying to reduce over trading. The more pairs you trade, the more losses, or the more trades you take and the more losses you could take. So me sticking to just gold, allows me to just sit down and be patient and wait for my best trade setup. And when they come, I trade it with a good size on it. So I'm sticking with gold, and I've been doing that for the last few months, and I hope to continue that way. But today, what I'm going to share with you guys, it's applicable to all assets, all instruments, whether it's the currencies, the metals, the cryptos, or in fact, the indices as well. So what I'm going to share with you guys today are stuff that I've learned from other traders. And more importantly, I learned from this book, all right, Mind Over Markets. So it's a reversal based trading idea because, as we know, the market does three things, okay? It breaks out, pullback and then trend, it breaks out, pullback and reverses, or it's stuck in the trading range. Okay, so this is a reversal based setup, reversal based strategy, and that's what I trade. And the key reference point here is the previous day's highs or lows. Okay, the previous day's highs or lows, the highest point of the previous day and the lowest point of the previous day. Okay, the idea is once price hits this level, it does not matter, what the asset class is, whether it's the pound USD, whether it's gold, whether it's the Nasdaq. Once price hits the high or the low of the previous day, okay, usually you tend to see a reversal. I mean, from your experience, how many times have you entered a trade and at the end of that day, price just continues to move in your direction? No, usually you will find the price would reverse first, okay, even though maybe it eventually comes back down on that current day, okay? So the idea is once price hits the previous day's highs or lows, you tend to see some sort of reversal. All right, and that's what I'm going to show you guys today. It's a very easy concept, easy idea that you can easily apply to your current trading strategy, or in formulating a new strategy. Okay, awesome. Let me show you. So here we are on the pound USD chart. So I have an indicator. It's called the previous day's highs or lows. Let me just double click on it so you can see. The previous day's highs or lows. You can search for it, you'll find it. So that just plots the lowest point and the highest point of the previous day. This vertical line indicates where the previous day ended. Okay, so this was the 14th of March, which was yesterday. This was the lowest point, and that's the highest point. As you can see here, it's so obvious. In this sessions, this is the first 3 hours in Asia, the yellow box, and the green box is the first 3 hours in London, and the red box is the first 3 hours in New York. And as you can see, all right, as price hits that level, all right, in this window, all right, we can see price printed a pin bar right after it hits the previous day's low, all right, and then price starts to reverse. And why does this happen, guys? Right, there are many people out there, many retail traders, they're big money sitting at these levels. They're setting their stop orders, waiting for price to hit their orders and then follow through. But you'll find that many times price hits them, traps them in the losing position right away, and then reverse. This was a strong reversal, and this was after actually a very strong downtrend. So you can imagine how many people are placing their orders, their sell stop orders below this level, expecting a follow through. But guess what? Price hits their entries, all right, hits their entries, and then puts them in serious losing positions. Okay, so if they don't have a stop loss, this is where they blow account. This is how people blow their accounts. Okay, so this is where we're looking to buy once price hits the previous day's low. All right, and we're looking to sell when price hits the previous day's high. It's textbook, guys. It happens most days. Again, nothing happens 100% in the market. Nothing always happens, every day the same way. So if you can wait for price to hit these levels, the previous day's highs, the previous day's lows, you will find that you can get good trades. Again, not everything is 100% in the market. Sometimes the market, will try to throw you off. Sometimes it might not be a complete reversal. Sometimes it could just be a stop hunt, and then the market continues to trend in the direction. Okay, so the idea is, if you're looking to buy or sell at these levels, all right, you should be able to manage your trade as well. Okay, because not every time the market would reverse like it has in this case. Sometimes it might just be a smaller pullback. But you'll find that most likely if you go down to the lower time frame, you can get a good entry on these types of trades. Okay, let's look at the previous day on the pound USD. Again, you can see here the price hits the low of the previous day, and then guess what? We see a strong reversal. In fact, that's where price began to reverse from. All right. If you're looking to enter on the 15 minutes, you would have been able to get a good and decent risk to reward ratio on these types of trades, even though the market reversed at the end of it. But the first time price hits it, you can see price, went down a little bit further and then began its reversal. Again, on the previous day, price hits the low of the previous day, as you can see with the red line and where the red line is. Price hits it, and guess what? We see a reversal. It wasn't a complete reversal in this case, but price kept coming down to that level. Price kept coming down to that level. Stop hunting the low in Asia, and we see price going higher from there again. And again in London, price hits that new low. All right, then everything is happening at the low of the previous day. And guess what? Every time price hits that low, price is looking to go higher. Okay. Again, another example, as you can see, price hits the high in this case, and guess what? We see the big reversal. And on we go. We can keep going. Again, another situation where price hits the high, and then even though it was in a complete reversal, price was trending greatly here, but you would tend to see some sort of pullback because price doesn't just keep trending once it hits this level. Price would come back. All right, price will come back, put in some serious heat on these types of trades. Again, sometimes we look at these types of trade and we consider it as a pullback, but sometimes the pullback could be 50 pips. No one knows how far the pullback would go. All right, even in a trending market, the price is looking to trend here, but price was still able to come back down in say 40, 45 pips. That's a significant pullback. Okay, on the pound USD, 50 pip pullback. That could be your trade. All right, and these levels are good reference point for you to look at. Again, price hitting the low of the previous day and reversing. Price hits it for the first time right before Asia opens, and then we see the first hit up. Price came back down, stopping out all these traders at the low of the previous day, and again we see a reversal. And I'll show you on gold. It's the exact same idea. So moving on to gold, we see a different type of example where the market was just falling. Today, the market was just falling right from the start of Asia, and the market just kept falling. Okay, so this was a situation where that kind of breakout reversal. That's not the type of trade that we're going to be looking for on these types of days because you can see the market just kept making new lows and new lows and new lows. Those types of trades that I'm talking about that comes from the previous day's highs or lows, you will find that the minute price breaks out, okay, in the next 30, 45 minutes, the market will start to reverse. This was a situation where if you're coming into your chart at the beginning of London, you can see the market is just making new lows, making new lows, making new lows. So these are not the types of trades that I would have been looking to buy because the market is just breaking down nonstop. All right, market is just breaking down, and we way further at the low of the previous day. Okay, in the previous examples that I've shown you, you see that the behaviors are a little different, and I'll show you. Let's look at the previous day on gold. This is what I'm talking about, guys, where price hits it. You can see the line, the low of the previous day, price hits it, and then we see a significant pullback. All right, we see a significant pullback. This was 120 pips pullback. All right, this on the lower time frame, you'd have been able to take 3 hour, 4 hour on these types of trades. All right, price came back down to that low in New York. All right, price hits it at the low of the previous day, and then we see another reversal before price broke down. Okay, I'm not talking about trades that broken below the low of the previous day, making new lows, making new lows. I don't want to enter that kind of trade. In fact, you could argue that these types of days do not happen often. Most days, the market is looking to hit levels and reversing, hitting levels, reversing. The market doesn't break down like this on most days. Okay. Again, looking at another day on gold, we see here price hits the low of the previous day, and then guess what? We see the strong reversal. There was a low here in New York. Coming into the start of the session, price came back down in a three candle formation, hitting the lows before reversing. Another example, price hitting the lows in Asia. Now, this is what I'm talking about. Price is not breaking below the lows and continuing to break down, price hitting the lows and reversing. And more example as we go. This was the low of the previous day, price hitting it, and then putting in the pin bar before reversing strongly. I'll show you the last example on the indices. So here we are with NASDAQ. Look, price hits it in London. All right, price hits it in London, came back, hit it one more time before starting the strong reversal. Okay, these are the types of trades that we're looking for. Maybe you entered here, maybe you've gone break even, maybe you entered again the second time, and then you'd have been able to ride this up. Another example we see here, the price hits the low, and then we see price beginning to auction higher. Price came back down for another stop hunt. All right. Price came back down for another stop hunt right to the zeros level. And then we see price auction higher. Even though price fell eventually, even though you could argue this was a strong trend day, but price was able to hit this level, put some serious hit, into some of the traders up here, or even the people that sold early. All right. And then this trade alone would have been able to give you a good risk to reward. We're talking about a 180 pips move right here. Okay. Another example, price hitting the high of the previous day. And guess what? Price reversed. I've shown you a lot of example, guys. On the day to day, on most pairs, you find that when price hits these levels, you tend to see a reversal. Right. So I hope this makes sense, guys. Go back to your chart, do your back testing. Find a way. If it applies to you, good. If it doesn't, just toss it. But the idea is once price hit the previous day's highs or lows, usually that's where the other time frame traders are, as defined in the market profile and as defined in Mind Over Markets, the book I showed you. It's a tough read, but it's a good read. So you can check that out as well. But this levels, the highs and the lows of the previous days are strong levels, and that's where you find those big orders. And once price hits it, price is looking to take traders in the opposite direction many times. Okay, and that's the types of trades that I look for. I'm not saying on a day-to-day, sessions to session, you're gonna find a good trade. The way I structured my strategy is obviously price has to hit those levels first. I don't do anything if price does not hit those levels. Price has to hit those levels for the first time. In my stop hunt window, I have a window where price has to hit those levels. And once price hit those levels, I'm looking for, three pushes to top or bottom, three candle formations, many other things that I consider. We see a round number level over here, where price just interacting with the round numbers. I look at some of these levels and I use that to formulate my strategy. But the idea is I do not want to enter many trades, but price has to hit those levels before I look to enter any of my trades. Okay, this year I've taken about 12 trades. Two of them have been losing trades, six of them have been profitable trades, and four of them have been break-even trades. So I don't take many trades. The trades that I entered, most of them work, and that's because I was able to just formulate my strategy based off on these ideas. When price hit these levels, more often than not, we tend to see a reversal. So if I wait for price to hit these levels, then I have a good chance of success. You've seen it. I've shown you many examples day to day to day. All right. And if you guys do not currently follow me on Instagram, I implore you to do that. I share most of my trades on Instagram, my trade breakdowns. You can learn a lot of this kind of ideas. And that's what I teach in my course as well. All right, guys. Awesome. I hope you guys enjoyed this. Again, if you've not subscribed, please do. I'll be sharing more content like this, and hopefully I can become more consistent on YouTube. All right, awesome. I'll see you guys next time.